Tesla had a really wild night in its trading on Robinhood, trading as high as 450, then opening this morning at 438 before dropping to 425, and it has oscillated back and forth between 438 and 425 ever since, being in the green at times. And currently, last time I checked, I mean, at exactly this moment, it was slightly in the red. That tells me that almost anything is possible today. My best guess, here you go, here's it is, my best guess is that the folks who still see Tesla as a car company and who think the number-driven folks at Tesla are stupid figure the Model Y standard is a bad idea. Fighting that crowd is the moderns, you and me, that are totally focused on FSD, Robotaxi, and Optimus, and they're super excited about the rollout of FSD 14.1 yesterday. And here's what Stifel said about it, and I kind of like his methodology. This is from investing.com. In a note to clients, Stifel said it believes that Tesla is making progress with modest advancements in the Robotaxi network and FSD. The firm added that Tesla has high expectations for its camera-based approach, which includes unsupervised FSD to be available for personal use in the United States by the year end. He's still quoting Elon Musk on that. I don't, it's, October 10th or 8th or whatever, a goal that appears to be a stretch, as they're agreeing, but seems more likely in the medium term. So maybe in the first quarter of next year. Stifel said its new valuation reflects a 20 to 25x on the core business and partial weightings for estimated upside for FSD, Robotaxi, and Optimus. You notice how he separates out FSD as a separate category. The analysts because remember, we're talking about, at $8,000 right now, that's all profit. Every time somebody buys FSD, it's 8,000 in profit. That's more than the car. The analyst attributes $213 per share for FSD, $140 to Robotaxis, and $29 to Optimus. So probably that means, we got 213, that's 353 and 30, 370, so $382, is just for those three. That doesn't hit anything for the core business. The note highlighted the initial launch of Tesla's Robotaxi service in Austin, Texas, where the company launched its Robotaxi service in June with limited service, using Model Ys with Tesla's FSD stack and a human safety monitor that sits in the passenger seat. Tesla has also received permits to test autonomous vehicles in Nevada and Phoenix, with I would have called that Nevada and Arizona, with expansion plans under consideration for Florida, New York, and he could have mentioned Illinois. The analyst added that the Trump administration's support for full self-driving technology, including the Autonomous Vehicle Acceleration Act, could help Tesla by exempting some vehicles from safety requirements and easing reporting on safety incidents. Stifel concluded, we're bumping our target price to $483 from $440 to reflect more confidence in FSD and Robotaxi. What did you think of that? Let me know in the comments below. I think that's a very, very good analysis. Wedbush analyst Dan Ives wrote this morning he was relatively disappointed with the vehicles. They aren't all that different from the existing models. Still, they're a step forward towards higher sales. As noted in my video with Nicholas Gibbs last night, I believe that the investors and traders all missed the point entirely yesterday. The stock went down early with even with the amazing reviews on the 14.1. Then it really hit the skids on the meh announcement of the Model Y and the 3 Standard. These affordable vehicles are not Tesla's future, quite frankly. FSD or cars, robots, data centers, they're the future. And we're seeing the future right now. We're seeing it happen right before our eyes. So I'm thinking the smart ones get it. And we will still go to 500 in late October or November 10th at the latest after the stockholders meeting. Then if we get 500 vehicles on the road without safety riders in at least 3 cities, we'll slam past 750 towards 1,000 by the end of the year or January 31st at the latest. EPS will be 75 cents in October. Nobody's talking about that yet, and close to $1 in January, with possible pickup of FSD accounting to 100%, picking up a lot of that old money that's been sitting around over there. That won't add to free cash flow, but it will add to the profits probably in the fourth quarter. Semi and cyber cabs in January, those are going to start ramping up in January, February. We'll start seeing those numbers, and that's going to help the stock as well. So what about the TAM increase? People are saying, well, this is the card. It's only at 39,000, and I'm sitting here thinking the same thing. Quite frankly, I thought that 39,000 was not going to be a good enough. But why rely on my brain that has no idea, who's never studied it, like everybody else that's running around half-cocked on X right now? And I mean everybody else, including people who think that they know a lot. So I had to ask GROK. All right, the 40,000 to 45,000 sweet spot accounts for 10 to 15% of total SUV sales. And based on segment overlaps and average pricing distributions. For a model Y like mid-size SUV, previously 45,000, which this could expand addressable market by 20 to 30% over the prior TAM, assuming 50 to 70% pass-through of the 5,000 savings via incentives, etc. This aligns with compact mid-size utility vehicles driving 50% of all sales combined. So SUVs of all kinds represent 50% of all sales in the US. This is going to increase the TAM by 20 to 30%. So GROK continues, arguments for the new Model Y and S standard trims boosting overall sales. Number one, expanded total addressable market. The sub 40,000 pricing could increase Tesla's SUV TAM by 20 to 40%, tapping into larger segments of budget-conscious buyers who previously couldn't afford entry-level EVs. Fills the tax credit void. These trims would directly access the $7,500 going away. And other companies don't have this new vehicle to drop in to take care of that spot. Price-sensitive buyer appeal. For work fleets, rentals are value-focused consumers. The core features like 320-mile range, supercharging access, GROK AI, they provide unbeatable long-term savings over gas vehicles, drawing in non-premium shoppers that don't care about the luxury add-ons. 4, state incentives synergies in states like Colorado and New York. Rebates drop effective prices to 33 to 36,000, making these the most affordable new Teslas yet and accelerating adoption in high EV regions. Robotaxi and FSD upsell potential. As robotaxi-ready vehicles, they enable future revenue from autonomous fleets, while optional FSD subscriptions turn a 37,000 base into a high-margin ecosystem play on the Model 3. Manufacturing efficiency gains. Leveraging existing lines without new CapEx lowers cost of goods across the lineup, allowing Tesla to scale volumes profitably and compete aggressively in the future. So, and by the way, many people, including me, are saying, the 39.9 is going to be the day in and day out price, but I bet it's going to be lower than that in December, depending on sales. Number 7, it retains core Tesla value. Essentials like the 15.4 touchscreen, heated seats, app integration keep the Tesla experience intact for 80% of the buyers who prioritize efficiency and tech over the niceties. And number 8, the bridges to FSD boom. These models position Tesla for an unprecedented demand wave once unsupervised FSD arrives. So later this year or early next year, we get the unsupervised, and these will be priced amazingly for folks who are thinking about want unsupervised, but just can't afford the extra $75 a month. 9, competitive edge over rivals. At 39.9 with superior range and software, they undercut Hyundai iONIQ 5 or Ford Mach-E equivalents, reclaiming share in the mid-sized EV segment where Tesla already leads. And finally, strategic volume play. Analysts see 10 to 16% sales uplift from these trims alone as they target the 35 to 40,000 sweet spot that drives over 50% of UV sales without diluting premium margins. And by the way, people are saying, well, gee whiz, there's not enough people that would be interested in, buying one why didn't they just buy it last month? You know, they could have bought it when we had the $7,500 off. Did you know that 14,000 vehicles per day are totaled? 14,000 per day are totaled. So that's 14,000 people per day who could say, what am I going to buy? I wasn't thinking about it at all yesterday, but today I'm thinking about it. So that's 5 million cars per year. 5 million cars per year are totaled. So I'm saying, yeah, it doesn't really matter that much whether people already took advantage of the really good deal. They should have done it, but the ones that didn't, and the ones who didn't even think they were in the market, they're every single day. There's more of those. There's some of those folks. 14,000 just on totaled vehicles, and that doesn't count people whose vehicles just give up the ghost. I've driven a few. I've driven a few cars until the wheels came off. This is Randy Kirk, by the way. So I asked GROK also, I said, summarize the comments of all the Fed governors. I mean, the Fed governors have been out and around and about. And yesterday there was this drop off in the middle of the day, which I figured might have been a Fed governor. So the top 10 takeaways from recent Fed governors and president's comments. Inflation is persisting above target. Multiple officials noted PCE inflation at 2.7 and core at 2.9 over the past year, with services and durable goods price rising faster than historical norms, driven partly by tariffs. Okay, so if you take those numbers, let's take the 2.9. Let's subtract 0.4. As the chairman of the Fed said, got to subtract 0.4 for tariffs. We'd be at 2.5. I think it's safe to lower rates. Number two, labor market cooling but resilient. Unemployment stands at 4.3 with job growth slowing to 25,000 a month, yet vacancy rates show near balance, indicating a healthy market. Downside risks to employment are rising, however, and this is why they'll probably cut 90. It's like 90% believe that the rates are going to be cut, 90% on the betting markets. Number three, the September rate cut is endorsed. The 25 basis points cut to between 4 and 4.25 was viewed as the appropriate risk management to support employment without overheating. Mark, that was a shift in policy, and that's what people are talking about. That this wasn't everybody's good with it. Everybody's okay with their first 25 basis points. Number four, data-dependent future path. Officials have been stressing monitoring incoming data closely, especially because government shutdown is keeping them from seeing data. So now they have to go to other resources and look at other kinds of data in order to make their decisions. Number five, debate on cut pace. Governor Moran, the newest guy, advocates aggressive, even doing 50 basis points instead of 25, due to declining neutral rate from immigration shifts, while others like Kashkari urged patience to avoid reigniting inflation. Number six, tariff risks highlighted. Tariffs are expected to push goods prices higher with limited pass-through so far, but potential for persistent upside inflation risk if rates to supply chains intensify. Well, you know, it's either one or the other. Either the economy is going crazy and everybody can raise their prices, or the economy is slow and sluggish, and so they can't raise their price. So, I mean, pick your poison. Number seven, policy stance slightly restrictive. Current rates are seen as modestly tight by the FOMC folks, given buoyant financial conditions and solid consumption investment. But adjustments aim to ease that towards neutral. Number eight, uncertainties demand preparedness. Central banks must build robust strategies in the future for unpredictable factors like AI innovations, demographic shifts, and financial systems change. Wow. The central banks must be looking at unpredictable factors. They're not so unpredictable, but they are somewhat unpredictable, like AI innovations and demographic shifts. Oh, what does Randy talk about all the time? Number nine, inflation expectations are anchored. Anchoring long-term expectations at 2% remains critical. It cannot be assumed. Officials emphasize credibility to avoid 1970s style entrenchment. Yeah, it doesn't have to be exactly 2%. As you've said in the past, guys, if you're heading towards 2% or you're near 2%, and of course, you know, trueflation. Anyway, regulatory tailoring for banks. Vice Chair Bowman called for modernizing supervision to reduce costs for community banks, including asset threshold reviews and streamlined mergers to support local credit access, which is the big issue with these Fed reductions it's not about houses. You got to realize that. I know you do. But it's about local banks being able to reduce their local rates for local business. Revolving credit fell yesterday. Revolving credit fell yesterday. Let me say that again. Revolving credit fell yesterday, probably due to folks having more real income. If overall income month after month after month is going up at 5% annually, and even if inflation is at 2.9, that is still 2 full points of real income coming in. Trump's ratings this morning at 48. That's up 2 points over the last 2 days. You've got truflation at 2.26 that's the overnight, and 2.13 year over year. And as mentioned, the Atlanta Fed came in at 3.8, still at 3.8% of their guess for GDP for the third quarter. They said they're going to stop with they're not going to do any more adjustments to this until the government opens up again. They just don't have enough data to keep doing it. All right. So what impact is any of that having on the markets? Well, Tesla is back in the green, up to $434.37. That's up 30.3%. And let's see the rest of the you've got the Dow Jones up 0.16. You've got the NASDAQ up 0.69 and the S&P up 0.40. So everything up this morning. Magnificent Seven all up except for Apple down a tad. Every one of them's up. The VIX is back under 17 again at 16.77. And the Cathie Woods are all like this. I mean, they're just going crazy this morning. So if they're that excited, that usually tells me something about, by the way, Tom Lee was saying yesterday, I was watching a video with Tom Lee, and I didn't know this, but there's an entire analysis that none of us do. All right. These are the sophisticated guys. There's an entire analysis that takes place with regard to the bonds and their impact on stock prices. And there's a whole methodology for when exactly to get into stocks based on when bonds are moving. And I never knew that. That's brand new to me. I may have to look a little deeper into that and how the math works on that. And I'll report if I can figure it out. All right, bonds down. 10-year bond down 1.4 basis points this morning, 4.113. I continue to take my lap on that one. We're not down to 3.95 yet, but I'm saying by the end of the month, and we barely for a second got over 4.15, which I said would be the top. It is still the top. Oil is up this morning 80 cents, but we're still at 62.53, which is good. Natural gas down 3% this morning, but $3.39. It's a nice, very strong number for the gas folks. Gold is past 4,000. Okay, here's where, another one of my predictions. I said the other day, time to sell gold. So we're now at 4,060. I think I can add that up. That's $60 over what I said would be the absolute maximum. We'll see. Okay, it might for a couple of days. Remember last week, bonds went up for a couple of days over my number, but then they fell back quickly. I'm saying this ain't gonna hold. I'm probably completely wrong, but that's okay. Silver, $48.47 this morning. It also is up 2%. That's probably an all-time high. I didn't double check it. Copper this morning down a little bit, but still down at over $5, $5.09. And the dollar is, of course, mixed. Bitcoin is up 1246, so recovering a lot since yesterday. It had really fallen. It's now back up to 122,820. And Ethereum is up 0.38 this morning at 44.95. All right, those are the numbers. Later on today, we are going to have, what are we going to have today? Oh, yeah, Brian Wang later today. And I'm not 100% sure what I'm going to do at the 7 o'clock hour. It'll probably be something very, very special. I've got a couple of ideas about what I might do. A couple of folks. Oh, I know. No, it might be Phil Beisel. Phil and I are going to do a video here in just a little while. And so probably going to be looking at Phil Beisel at the 7 o'clock hour. So that'll be good, given the FSD 14.1 rollout yesterday. I'm sure he'll have some very interesting things to say about that. So I would say you're going to have a techie afternoon. And you guys, more and more of you are watching Brian Wang, because why? Oh, because Brian Wang, everything he says is original. I mean, it's all from the brain of Brian. All right. Last night we would have had Brian White with a late video. Very, very good video. You guys did watch it a lot, so you may have already seen that. But did you watch the debate between Randy and Nicholas Gibbs last night? We were on for an hour and a half. And yeah, you guys, a lot of you did watch it. If you've got some time on your hands, maybe you would have set it at double speed. I don't know. I'll put both of those cards up. And that's all I've got for you right now. But I'm telling you, the Tesla stock is just all over the place. So it'll be fun to see how much it's moved in those few seconds. It is now back in the red, down 0.03 at 433. So anyway, who knows? Could end up at 450, could end up at 425, could end up at 470. I don't know. It's just all over the place the last 24 hours. I think this is a war, as I mentioned, this war between the old folks and the new folks. It's been really, really amazing talking to you.